Hello, this is Robert. I'm an attorney with TRP. I handle the financial analysis and reviewing offer and compromises for the cases here. And I'm going to walk through 433 AOIC with you and show you how to fill it out. First, I'm going to recommend using Adobe Reader. You can also use Adobe Acrobat if you already have that, but Adobe Reader is the recommended one to use. Make sure you download the form and fill it out. Do not fill out on the web. Use this form pretty much if you're an individual. That's what this form is for. And by that, they mean it could be joint as well. This is just not for businesses. And by businesses, I mean corporations, things like that. For self-employed businesses, you would still be using this form. And this is what we're going to get into. Section 1 is just going to list all your basic information. They want to know married, unmarried, own your place, rent your place, some other living situation. I do recommend on this, if you have one of these other living situations, get some type of agreement together. It just looks better for your case, makes it easier. County, if you're receiving mail somewhere else than your regular address, you're going to put that there. Your spouse's information. So if you're married, even if they're not part of the debt and it's separate, they still want their information because they're trying to figure out, the total household income. And also sometimes there's community property issues and things like that. These are all the people that are living in your household or claimed as a dependent. They want to know, are they're claimed, yes or no? Are they contributing to the income? Yes or no? Sometimes you have people live there, they're not contributing. That doesn't really help you. Most people are just going to have their kids in here. That's the typical people you're going to put in there. So employment information for wage earners. This is section 2. So if you have a W-2 job, this is where you're going to fill it out. They're going to ask you, where you work. Do you have an ownership interest? Most people is going to be no. They're going to have the address, what type of job, how long you've been there. Then the same thing for your spouse. If you are self-employed, technically you can just skip this section, but what we do just to make it easy is I just write self-employed in caps right there, and then they end up knowing where to go. And they look at the next section that's way down there that covers that. Section 3 is personal asset information. So they're trying to see, what do you got? Most people are going to have a checking account. That's the most common type of account. Some people may have savings. If you have a huge savings, you might not be a great offer and compromise candidate. Account numbers, all that. And what they're trying to do here, and this I'll add in here just so you see how it works. So say you have $1,000 in one account, okay? You get $1,000 in the next account. You have no attachments. So what happens here is this total is $2,000. But right here, we're going to be minusing $1,000. So our total here is still going to be $1,000. And here's stocks, bonds, things like that. This is the tricky thing on stocks. I'm going to fill this little section out just to show you guys. So the name of the financial institution, a Ameritrade, whatever it is, your account number. And this is where it gets a little trickier. So you're doing $1,000 is the value of it. They're going to take 80% of that value, which would be $800, plus any loans against it. A lot of people have no loans against it. And so that is zero. And then what's really left over after that is $800 to them. So 2A through 2C. So these things are adding up, going to the bold at total, with this one minus the 1,000. This one, 800. What else would be here if there was something? And then it goes to 800. This is retirement accounts, 401k, IRA. So you could do the same exact analysis applies as if it's stocks. If it's worth 1,000, then it's really worth 800 to them, minus any loans, and you're at 800. Insurance policy. So these are cash values. Whole life is going to have a cash value. Term life almost never has a cash value unless it's some special kind of policy I don't know about. But they're not looking for what you get if you die. They're looking at what can you get if you cash it out today. And most insurances, life insurances, you can't cash them out. So for most people, this section is just going to be a zero, big fat zero. So I put a 0 when it is 0. It just makes it easier for the agent going through and looking at this. Next, personal information. Personal asset information. This is where do you live? And if you own the place and any other properties you may have, any land, anything else that might be out there. They want to know, is it a primary residence, yes or no? So if it was your house, you would be, or your condo you live in, you would put yes. All this information needs to be in there. Joint tenancy, they want to know, is it, held joint tenancy, tenants in common, tenant in entirety. And same thing, this is also going to be valued at 80%. So say you had a $100,000 house and it was valued at 80%, you'd have $80,000. The thing is, most people do have loan balances as opposed to the other ones earlier. So what's the equity according to the IRS? Is $10,000 on the house because you have a $100,000 value, 80% of that value minus a loan, which is the mortgage, $70,000, and there's $10,000 in equity. Hold on one second here. Okay, so most people are just gonna have one house. If you got two houses and a bunch of properties, and a lot of them are paid off, you're probably not a great offer candidate. So 5A through 5C, same thing. Adding up the 5 numbers, going to the bold. Okay, vehicles. These get a little trickier here. So they want to know when you bought it, when your final payment is, if it's a lease or a loan. If it's lease, there's going to be no current market value. The loan balance is nothing because you're just essentially renting the car. If it's loan, you want to have name of creditor, date you final payment, same information. But you're going to do that same 80% value. So say the car is worth $10,000. And this is the thing, most cars are upside down. So 8,000, and then they still owe 15,000. So this is the most common thing, as you're going to see, is going to be a zero. It's going to be a zero. And this is subtract 3,450. I'll go with that on the next one. Okay. So let's do this one. Say this car is worth $4,000. That one I got to do. Okay, so you got 3,200. And he has nothing is owed on it. So now I have 3,200 here. So you're supposed to subtract 3,450 for each car if you're married. If you're single, you get 3,450 once. So when I take 3,450 off the 3,200, you don't put a negative, it's actually a zero. And then you're going to go to zero. And most people in this section are going to end up with a zero. And we'll talk a little bit about this later. I'm going to do a recap on this to talk about the actual settlement valuations. So personal information, this is like jewelry, stuff like this. Most people, whatever they have is very negligible, and we just put none. That's usually what we do, is put none. And we'll just put zero. Furniture and stuff is usually not worth that much, that you just put none. And that almost always works. And they don't really care. You can also, if you want to, you can put $500 or something like that, and you can just ask them not to include that in the offer. But really, used furniture has almost no value. It's even hard to sell, So that just keeps it easy. So here we go. Now we're looking at this box A. Box A is going to be adding up all the bold spots, 1 through 7. So there we go. So we got 1,000. We got 800. That's 1,800. Let's to keep it easy. So we have 1,800. 1,800 plus 800 plus 0 plus 10,000 plus 0, 0, 0, 0. So the equity here is 12,600. Okay. That's the equity and assets. So if you owed $5,000, probably not going to get a settlement. There's some exceptions to that we'll go over here in a little bit. So self-employment, they want to know your sole proprietorship. If not, either way, you're going to fill out all this information. Tax deposits. This is really for payroll, and this is average gross monthly payroll. What you're paying to payroll. If you're not doing payroll, a lot of people are not. This is not going to be done. In fact, a lot of people are going to be corp or something like that. It'll be different. It'll be differently, and maybe getting a wage, including that in wage, and we'll just be explaining that with the offer. You'd want to explain in the cover letter. Oh, I have a corporation. I get paid this way. That would not be necessarily this section. It just depends on the case, actually. Some we'll explain a little bit here, and then we'll send your pay stub and do that kind of explanation. And you just want to be as thorough as possible on this type of stuff. Description, number of employees. Okay, business asset information. This is for self-employed. They're going to try to see, what do you have? You have money in the account. Is there no money? And you guys, if you're not self-employed, you can skip forward a little bit in this video and just skip this section. They want to know assets. Most people are going to have almost no assets. Things that would be assets would be like if you had a body shop or there's expensive tools. It's going to be the same thing. You're going to do the same thing times a 0.8. The thing is here, you're going to get a $4,690 credit. So that $4,690 credit zeroes out a lot of stuff. And, realistically, a lot of time you can get around this, and we'll go over that towards the end as well. Notes receivable, most people are going to say no. Accounts receivable, most people are going to say no. And usually this is going to be a 0 for most people. What you're going to do here is you can go ahead and fill out a profit and loss, or you can use your most recent Schedule C. And if you do the Schedule C, there's a simplified version of doing it. If you want to do that, you can just add them up together when you're using the Schedule C. That makes it easier to base this whole section off the Schedule C. If you're not, then you have to fill it out based on more recent information. If more recent information shows your income is less, sometimes it is worth doing that. We usually do Schedule C because it's just simpler, and most of the time the person qualifies to qualify anyway. Okay. Monthly household income and expense information. This is where most people, everyone's going to be filling this out. However, most people are going to be putting in wages. Some people are going to be putting self-employment. This box C is where self-employment income would go. So let's just do a sample. So this person makes, let's say, $5,000 a month. And their spouse is not working. So let's put $5,000. No other income. And this is your before tax. Now come the food, clothing, miscellaneous, housing, utilities, all this kind of stuff. So these are going to be based on this web page. You're going to want to go to this web page and then literally fill out the information based on it. The only exception is housing utility. They want you to use the higher amount if it is for housing. If you can prove higher, sometimes you can get that accepted, sometimes you can't. The other thing is if it's lower, they want you to show exactly what it is. When it is lower, they're going to look at your bank statements and they're going to see it. So there's no really hiding that. Most of these are going to be standard figures that they're going to give you on this website. The other thing with vehicles, they want your actual vehicle payment. If your vehicle payment is over, sometimes they won't accept that. Technically, they only have to accept what the standards are. If you have a special vehicle for work or something like that, sometimes that's a good explanation to get that vehicle accepted. Now, here's a tricky one. Vehicle operating costs. This is based on your county, but you can add $200 when your vehicle has 75,000 miles or more on it per vehicle. And that's what jumps people up. So let's just do a sample here of this. Whoop. Okay. I should have clicked new page. That's fine. Hold on one second. Okay, that's another reason why you do it in Reader. So I'm just going to go ahead and put that back. So we're just going to go with 5,000 in household income, and then we're going to the standard. So food, clothing, miscellaneous. Let's pretend it's one person living there, just to make it simple. So we're going to go one person, 647. Housing utilities. Let's just do Clark County. $1,458. So if you're spending $1,500, you probably should just put $1,458. If you have some reason for spending more, that's you need to explain that. But if it's less, also put what it's less. So I'm just put $1,458 to make it easy. Vehicle lien or loan. Vehicle payment is pretty much set as well, and this changes every once in a while. Transportation standards. So you get $497 the ownership cost. So that's the only amount of credit they have to give you. But if your car is less, they want you to put less. Now, operating costs. This is where you can add some expenses. So this goes by county, and I'm pretty sure we're actually not in any county. So see, we go to West Region and look for, Nevada's in West Region. What you'll see is there's no special county. So these special counties have higher amounts. Las Vegas is not in here. We're in Clark County, and Nevada doesn't even have any special priced county. So if you leave in some of these other counties, they give you more money. So we just get the straight $218 per month to operate the car. The catch is this. If your car has over 75,000 miles, you can add $200 to that, and then we can put $418. This ends up being the number that puts a lot of people over the edge sometimes to get it. Public transportation, usually not going to accept that if you have a car. Health insurance premiums, whatever they actually are, we'll just put $500. Out-of-pocket healthcare costs. So if you can prove you have much higher ones, you can put that, but otherwise you'll be putting this other figure right here. And it is $52 if you're under 65 or $114 if over. So we'll just put 52. And hold on here 1 second. Okay, so court-ordered payments. That would be like child support. You got sued and you have to pay the judgment, stuff like that. You'd put in there. Most people are going to be zero, but some people got that. Child care payments. This for child care, daycare, stuff like that. Life insurance premiums, anything paid for life insurance. Current monthly taxes. What are you paying per month? And, I'm actually just going to turn this into 3,000 just to make this a case where someone gets a settlement for sure. Because 5,000 is kind of on the higher end of getting one for a single person, unless you owe a lot of money. If you owe a small balance, 5,000 might be a little too much if you didn't owe enough. Life insurance premiums, we'll just pretend they don't do life insurance. Current monthly taxes, and I also just put zeros here when they don't do it. Let's just put current monthly taxes just to make it simple, 500. Secure debts. So collateral stuff would be in here. The only other thing you add in here that doesn't really have collateral is government guaranteed. Yeah, like student loans, exactly. So you'd be student loans. So say they have a student loan payment of $250. Okay. State and local tax payments. This person we're pretending is Las Vegas. They don't have state payments, but we do have a lot of New York and California clients. And if you are on a payment plan with either of those, we would include that in here. And sometimes your strategy, if you owe to both, is to set up a payment plan with the state and then submit your IRS offering compromise, because that makes it so your numbers look better to get accepted. But for this purposes, we'll put a 0. Now we're going to total these up. There we go. 647. Okay, 4322. The remaining monthly income, 3,000 minus 4322 is 0. He's totally in the red. So that's what we try to do in most cases, is get it to a 0 point. And so say he made, just say 4,500. Let's redo this number. 4,500 minus 4322. We'll do 178. And so if you're at 178, try to think of other things you could put in there that would close this gap to 0. Because closing this gap to 0 means 0 times 0, 0 times 12 equals 0. And your settlement ends up being really low. But we'll do it the 178 just for practice. So there's two types of settlements. There's the 12 times 12 and the times 24. Okay, this is if you're going to pay the settlement within 5 months. Okay, this is if you're going to pay it over 24 payments. We always try to do this kind of offer. Always the times 12 if we can. And then once the settlement, if we're on the verge of acceptance with the examiner and it turns out if the offers are going to be the same here, when this equals 0 on both, it doesn't make your offer more expensive to extend the payments. But we're really going for mostly really low offers most of the time. But here we go. So 178, if that was available there, and that was available there. You're only going to do one of these depending on the offer you're doing. But I'm just going to put them both there just to show you. $4,272. So if you did the longer offer, you'd pay $4,000 plus your assets. And then we do 178. Okay, so from box A, let's just, we had like $12,000, I believe. So we'll just put, whoops, there we go. So we had $12,000 available assets. And we're going to go with box G for the better offer. So that's how much you're trying to try to settle for. And if you owe less than that, you're not going to get a settlement. If you owe close to that, it's probably easier just to pay it off. So, but if this guy owes 50 grand or 100 grand, it's worth setting a settlement. What we would do is we would actually try to make this 0 if we can, legally. And then that way the settlement is much smaller. And then the other part is, on these assets, I would go back and try to explain some of them away. Okay? If you have property and you have a little bit of equity, you can say, this is wrong with the property. It would make it be worth less. If you have cars that are paid off, you say this cars have this many problems in them. Always use the lowest trade-in value. You don't want to do anything illegal or misstate anything, but you want to make everything seem as grim as possible and as worth as little as possible to get the best result. And it can go both ways. We have had some agents that have accepted offers where the client even had a paid-off house. And we've had ones where there was some equity and they denied it. And some of these things kind of come up to the discretion of the agent, especially when the client is older. Sometimes they'll give them a break on the equity. Very often you have a car that has value in it. You'd say, I can't sell the car because I need it for this. Most of the time, they're not going to make you sell your car to try to get a settlement. So they go pretty easy on that. I also, if you have a small 401k balance, we always ask that it not be considered and it's an emergency fund. Sometimes that works and they allow it because people need a little bit of money, and some agents are sticklers and they'll stick to the 80% value. So, we always want to offer the lowest and then see what they come back with. We always think that's the best strategy. Now we'll fill out section 9. which is probably the easiest section to do. So, trust estate, you get any free money, pretty much. That's what we want to know. Are you in a bankruptcy now? They want to know if you filed one. If you did, they want to know where. Party to a lawsuit. I'm just saying no. Put those details. They want to know if you've been in United States related lawsuits with the government. Okay, and they want to see these questions are about if you transferred stuff. So anything for less than their full value, do you get rid of cars or jewelry for cheap, stuff like that. If you gave your kid your car, they probably don't really care. It's more, did you hide a Ferrari or something like that? Or do you have, and here, this is real property. They want to know, they want to look for that same type of issue. Here too, if they want to know if you've transferred a real property for less than the value, but they want to just look at all real property because they're going to think, oh, maybe people's doing a scheme, something like that. Have you lived outside the U.S. for 6 months or longer in the past 10 years? They want to know what you own outside of the U.S. Any funds held by a third party. And then here's the signatures. You're going to put these two. And then this is only if you're married. You can do the second one. And then here's all the information they're asking for that's supposed to accompany the form. And on our website, we have the guide that goes through the rest of offer and compromise the other form and also lists all this kind of stuff. So you can also check that out as well. And that is our presentation here on 433 AOIC. Good luck. If you don't want to do it yourself, you can always call us at 888-515-4829. That's 888-515-4TAX. We can help you with it. If you cannot afford representation, we do recommend check out our tax help guide. Also at trp.tax, go to trp.tax, look at the top, go to tax help guide, just fill everything out, get it in. If you cannot afford help, most of the time, if you just submit it, you'll probably get a settlement. Chances are very good, as long as there's not a ton of equity. Anyway, this is Robert, and thanks for watching this video. Have a great week.